All right, let's talk more about the Fed and get some reaction from Yahoo Finance's Allie Canal and Josh Schafer on the breaking Fed news. Josh, you've been looking into reaction from the street so far and from, I don't know, a FinTwit. I don't know what you're looking at.
Yeah, just taking a look at everything out there. Normally, I would say the biggest takeaway is that there's a strong takeaway, right? And that's something that we don't necessarily have today. You go back to last Fed meeting, it was hawkish pause, right? Almost every economist, every analyst was writing hawkish pause. That's what today's message is. And we're not really getting that clear message today. But some of the ones I did want to highlight that I thought were interesting, we had Pantheon Economics pointing out that they think that this move today was essentially pointless. That was a strong take. But I thought it was interesting because basically what they're saying is the Fed won't get enough data in the next month if they are going to hike in July. What's the difference between just not doing it now, hiking right now, and then waiting, maybe you hike again in September, essentially saying that what Powell has said about monthly data not being as reliable isn't good. Then you take a look at what Oxford Economics said. I really thought this one was interesting. They called it a bluff, and specifically referring to the dot plot. And I think what they were referencing is once Chair Powell started speaking, the dot plot kind of did seem like a bluff in some ways, right? Because the dot plot seemed to indicate we're definitely hiking more. And then once he started speaking, he sort of backed off that a little bit, and you saw that reaction in markets as well as we saw a little bit of a rise in stocks.
I mean, it was down as, nearly 400 points, right, initially on the statement, and then the Fed chair starts to speak, and then it's sort of, well, which way is it going to go? And this kind of gets to the point that we were talking about with our earlier guest, which is you had the statement, and then you had the Fed chair come out, essentially felt like he was sort of walking back a July hike, even though he said it was live, because when he talked about what more he needed to see in order for another hike, it just doesn't feel like you're going to get that between now and the end of July.
Yeah, he said, don't call it a skip. That was one of the quotes there.
He said, I shouldn't call it. He said skip. Well, I shouldn't say skip.
Right, exactly. And like we've been talking about, he said there is credible evidence that inflation is coming down. He said much of the tightening took place summer and the end of the year, so he's comfortable pausing rates at this point and stretching it out a bit to have a bit more of a moderate pace. But at the end of the day, he said the risks to inflation are still to the upside. And in terms of any potential cuts, we're not getting that for at least a couple years is what he signaled. So definitely not in 2023. The Fed dot plot showed that as well. So you have to be a little curious where he's going with this. I know you were just speaking with your last guest about what the narrative is here, because there just seems to be this conflicting
Allie,
messaging.
I just got a note in from Bank of America, too. Their economist team now saying they don't see cuts until May 2024. And Julie, I know you were highlighting this earlier. We were talking a lot in May, like 2 or 3 weeks ago, about cuts coming at the end of 23, right? And it seems like that conversation has basically just ended. I know Powell said that they're not considering it right now, but even economists who obviously project different things than Chair Powell were talking about cuts in 23. And it seems like that conversation is really starting to end here. I should note B of A also saying they do expect those 2 more hikes to come in July and September. That's their forecast right now. So interesting to see.
Yeah, the market had been pricing in those cuts, and the Fed kept saying it's probably not happening. Now they're like, it's really not happening, guys. And the market's finally gotten the message here. So, Allie, talk us more about what about these dots that we
the dots. This is part of the summary of economic projections, which the Fed comes out with their forecasts for types of indicators like GDP, unemployment, inflation, and of course, interest rates. So this is what we have here. And as you can see, interest rates are expected to continue to be high in 2023. I want to go and focus in on what we saw this year. So if we go to this handy dandy drawing here, we'll see that most FOMC members, each dot represents a member here. They see interest rates peaking at 5.6% this year. Now that's higher from the March projection of 5.1%. So that does suggest that the Fed is going to raise rates 2 more times by 25 basis points, or perhaps 1 time by just 50 basis points here. We see 3 members expecting rates to be closer to 6%. But again, no members at all are expecting that rate hike. Now, if we take a look back at the longer term projections, they do anticipate that interest rates are going to come down to 4.6% in 2024. But you can see there's more dispersion here the longer that we go, because the longer you go, the difficult it is to predict what will happen. Now, I did mention some of those other economic indicators. So let's go with the Fed's projections for core PCE inflation. That's consistently very important for the Fed. We see that at 3.9%. That's higher than the March projection, but the Fed at least does expect inflation to cool to 2.6% in 2024 and 2.2% in 2025. Then if we go to the unemployment rate, that's showing an improvement here over March at 4.1%, but it is expected to tick higher to 4.5% in 2024 and stay at that level through 2025. And then finally, GDP. Now, the Fed does expect slightly stronger economic growth at 1%, and then we get a little higher as we continue to go. So a lot of data points here, but again, this is all just a forecast, and we don't exactly know what will happen until we happen, which seems to be the message.
Can we go back to the PCE one for 1 second? Okay, so here is what's nuts. Why is their target still 2%?
Yes.
Right? Why do they not
move up at some point?
Why don't they change their inflation target at this point? It just doesn't make any sense. This is this acknowledgement.
Yeah. Even 2025.
They're not still going to be raising rates at that point by their own forecasts.
But we're still above the 2% mark.
They're still above the 2% mark for the next couple of years. So it just seems out of step with reality, that particular part of the forecast, to not bring it down.
And Powell said that was a very important thing and that the committee would be doing everything they could to get to that 2%.
Well, so, you know, what's interesting is I'm sort of thinking this through in my head because watching the press conference, I felt like I was getting swayed on both sides about what exactly the Fed's next move is. But if you think about where core inflation is, well, above 5%, the Fed can't not come out and say, yes, we're going to do more because the target is at 2%. I did think it was interesting, though, with our last guest who said it really is all about the stresses we're seeing in regional banking, which is why this meeting specifically they chose to pause, skip, however you want to characterize it. He was asked about that, but didn't really, I mean, he talked about the tightening credit that he's seeing around the banking system, but didn't necessarily address how that played into the thinking of this.
No, he deferred, right? He said it's too early to tell.
Yeah.
And so that's why you pause. That's maybe how you read some of the pause, right? Because he said it's too early to tell. Essentially, we need to wait and see. So maybe that's what they find out over the next 6 weeks? Maybe
and then he was asked, what if nothing changes?
Right.
What if the data doesn't change? If another 6 weeks have passed, do you go ahead and move anyway? And he said, no, we're data dependent. I don't know.
It's like you just have to throw your hands in the air at some point because we're not going to know until we know is the takeaway that I got.
We're not going to know until we know.
Okay.
We'll
be back in July then.
Yeah. Okay.
Gives us enough to talk about between now and the end of July.
Yeah.
We'll do another roundtable.
I love it.
Do it.
All right.